All right. We are back again this week. Hope you guys are
And what
having
a week it has been.
an enjoyable week. Yeah, the market's been it's wacky, man. It's been wacky for a long time now.
Yeah, the past 2 weeks have been rough, and it's the volatility. If anybody's been following the dollar at all, the dollar has been tanking since the beginning of the year, and then it out of the blue, the last several days, not counting today, last several days ripped higher, and today has completely reversed. So I mean, a lot of it has to do with tariffs and other things, but the volatility is what is really difficult. The volatility meaning big swings in both directions. It's just really, really difficult. But we have a lot to talk about on this week's podcast. So, TSP Weekly Podcast, 03 August 2025. So, we'll take a look at what happened this week. The Fed meeting, tariffs, and the August 1st deadline. And we had a good chunk of the Magnificent Seven earnings this week. And then it's also the end of the month. So we have monthly candlestick patterns and the regular weekly TSP Fund charts. So Monday, we had Dallas Fed Manufacturing Index, right? We've been talking a lot about these manufacturing and services are the two sides of the economy. And they break the country up into regions. And the Dallas region came out, was up 0.9 after being down negative 12.7 last month, right? So a huge move in the right direction. And it was forecast to be down 8. So it way outperformed estimates. And that kind of looks like this on a 3-year. So anything above 0 is an expanding economy. So we're only talking about the Dallas region, but it had been below 0, right, for a long time, back into 2022, probably into 2021, and then popped above it a little bit at the end of last year. And then now is just, hopefully the trend continues. It's certainly improving. So that's a positive for manufacturing. And we've been talking about these bond auctions, right? We had a 3-month, 6-month, 2-year, and a 5-year bond auctions all this week. All of them were above the rate that got paid at the last auction. So they weren't, I didn't break it all down like I did last week. They weren't significantly higher, but this was the first week that the government had to pay a higher rate for those bonds than they did before. And so the higher the government has to pay to get investors to buy those bonds, the more the deficit grows. The S&P was up 0.02% on Monday, so basically flat. Then on Tuesday, we get the Dallas Fed Services Index, which is the other half of the economy from manufacturing. That was also up 2 versus being down 4.4 last month. So again, same kind of thing. Services in Dallas had been contracting since sometime back here in 2021, 2022, had a little bit of an uptick, so is now expanding the end of last year, back into contraction, and then now, hopefully the trend continues and we're back to expansion. So no matter how you look at it, it's a positive for the economy in terms of data looking backwards. So that's great for the Dallas area. And we had the Case-Shiller home price index was up 2.8% year over year, meaning house prices nationally, according to that index, were up 2.8% year over year. That was the lowest increase in housing prices since August 2023. Okay, so the rate of increase in home prices is declining. Doesn't mean homes are getting cheaper. It just means that they're not getting more expensive more quickly. S&P was down a third, so 0.3% on Tuesday. Wednesday, we had 30-year mortgage rates dropped a little bit, just barely, 6.38% from 6.83 from 6.84 last week. New applications fell a little bit, 3.8% after having been up 0.8 last week. Mortgage refinances also fell, third consecutive week. That's not great. The big news on Wednesday was the Fed maintained the Fed funds rate range between 4.25 and 4.5%. We're going to talk about that in a minute. S&P was down 0.13%. Then on Thursday, we had personal consumption expenditures month over month. So it's exactly what it says, people spending on consumption. So month over month, it ticked up 0.3% from 0.2% last month. So that's actually a positive. People feel like they have money to spend. It ticked up a little bit. And that was in line with what analysts thought. Personal income was up 0.3% after being down negative 0.4% last month. So that's good. Income is improving. Spending was down. Spending was up, so 0.3%. So I don't know. There's not a whole lot in these numbers. There's not a whole lot of movement. But basically, what it's saying is the economy is actually doing pretty good. On Thursday, we also had initial jobless claims that ticked up a little bit, 218 versus 217 last month. Not really big, but continuing claims remain flat, and the 4-week average jobless claims fell. So the labor, report is actually pretty good for the week. S&P was down 0.37% on Thursday, and then on Friday we got the actual unemployment rate, and it ticked back up to 4.2% after having been down to 4.1% last month. So there's a lot of numbers in there, but nothing is really spiking in one direction or the other, which is making it really hard for the Fed to try to figure out what to do with interest rates. So we had the Fed meeting on Tuesday and Wednesday. The Fed comes out on Wednesday, keeps rates the same, which is what everybody expected. Powell comes out and says that the conditions are modestly restrictive. So from his perspective, he thinks that the rates are high enough to not cause, continue inflation and to not continue a rise in stock prices or not add to that. So he kept the rate the same. The range is 4.25 to 4.5%. The administration has been trying really hard to get the Fed to lower those rates, and Powell held his ground and didn't do it. But these are the reasons why, right? Unemployment is low, the economy is strong, and the labor market is strong. So if he brings rates down, that unemployment's already low. Rates don't need to come down. The economy is already strong. Rates don't need to come down. The labor market's strong. Rates don't need to come down. And inflation is higher than the 2% target. And when inflation is high, interest rates need to be high to pull inflation down. And he's still worried about interest rates or inflation in terms of tariffs. So if the tariffs cause inflation and he brings rates down, that's really going to spike inflation. And at the same time, while the economy is strong, labor market's strong, unemployment's low, unemployment ticked up this month, right, to 4.2%. So there are risks to both sides. There were two dissenters. This is the first time since like the 1990s that there were actually two people on the FOMC board that disagreed, and they thought that Powell should have cut rates at this meeting. So one of the things that people are kind of concerned about, not that you can't have interest rate cuts in between meetings, but it's rare. This is the longest time period between Fed meetings of the year. So we got like 6 weeks, something like that, until the September Fed meeting. And during that time, we're going to get 2 more inflation reports and 2 more employment reports. So there's going to be a lot of data between now and then, and he could come out and do an emergency rate cut or a rate hike. If inflation goes up, he never talks about it, but a rate hike is certainly a possibility. That would tank the markets, but that's the way that goes. So the big question is, do we get a September rate cut? Okay, Wednesday and Thursday, we had big tech earnings. So Wednesday, after the market closed, we had Microsoft and Meta. Both of them were big wins on earnings. Microsoft was up 7% in the aftermarket on Wednesday. Meta was up 10%. Then we had Apple and Amazon on Thursday. Both of them were also big wins. Apple was up, but Amazon was way down. Amazon Web Service, it didn't get everything beat estimates, all of it, but it's always in the kind of in the fine print, in the details, and the market didn't like what's happening with Amazon Web Service relative to some of the other web services that are out there. But the important thing is these companies make up 20% of the market cap of the S&P 500. So what they do matters a lot. And if you looked at the market on Thursday, Microsoft and Meta were up really big at the open, and then they still finished up for the day, but they reversed really hard. And then Friday, Amazon is off like 8%, I think, as we're recording this, and Apple is up, but not a whole lot. So today's a big day for tariffs, right? It's August 1st, it's the deadline, and it looks like the deadline's going to hold. So this is sort of a summary. It's not exact, and things aren't going to be exact. They're going to change a little bit because the administration is saying that, hey, just because August 1st deadline came and went doesn't mean that we're not going to continue to do deals going forward. But everything that's in place effective August 1st is going in place. Japan was a really big one in the last week or so, and the EU was a really big one. So the EU is really, for almost everything, is 15%. Japan got theirs down to 15% from 25% on some really, really creative financing. Canada is back up to 35% from being down at 25%. And these are some of the examples of the other countries. One big one that's missing from here, I would say, is Brazil, which is at 50%. And then the baseline for all the countries that aren't, that didn't make the major lists, a baseline is 10%. The big one missing from all this is China. The Treasury Secretary in Geneva, I guess it was, recently, like this week or last week, trying to decide what to do with China. Both countries agreed in May to a 90-day pause, and that pause is kind of still ongoing. That was going to be at 30% U.S., and then China was going to reciprocate with a 10%, and that went into effect on May 14th. All that was set to expire on April 12th. They were trying to hammer out these agreements between now and then, but Treasury Secretary comes back, and there is no agreement yet. That was in Stockholm last week. They reached a consensus that they're going to maintain the tariff levels. China came out and said that it was much more positive, I think, than Treasury Secretary said. But any agreement would have to get final approval from the president, and we're not there yet. So there's no new status really for China, and that's the big one that's outstanding. All right, so it's very complicated. There's a lot of complicated stuff going on, but as far as TSP investors go, it's long term, right? We're not really trying to get sucked into the day-to-day operations of the economy. We are looking at the long-term trends. So every month we get a chance to look at the monthly candles, and it kind of gives us a much better perspective. So this is a 10-month moving average line in blue. As long as price, each one of these ticks is 1 month of price movement. So as long as price is above that blue 10-month moving average line, the long-term trend is up. Okay. The big, most recent important month is right here. Right. Everybody remembers April. There's a big tariff scare. At one point in April, prices were down here at that low, but they reversed by the end of the month and closed just a little bit below where the month opened. And that was the beginning of the rally. It's called a hammer. This is a hammer candlestick pattern. It's very bullish, and we've had the last three successive months, and we're at new highs. Okay, so we closed the month. We didn't close the month at the top. right? We closed the month down here a little bit, but we are above the midpoint of the range. And from a long-term perspective, the trend clearly is still up and the rally continues. S Fund is pretty interesting because it has hit this 2400 level, got above it on that month, reversed this month, so couldn't hold it, came back up, hit it here, and hit it this month. For whatever reason, that 2400 number is very tough for the S Fund to get past. But once it does, we're going to be good. But in the meantime, that is has been a brick wall for the S Fund. Again, very bullish in April, 3 consecutive months, and the rally continues, but it's a big brick wall right there. iFund, big reversal candle this month. We got all the way up here, and at some point during the month, and then reversed really hard, and a lot of that has to do with what happened with the dollar in the past week, and we're going to talk about that in the newsletter this weekend. Ideally, the iFund doesn't get below, if the pullback continues, the 10-month moving average line continues higher, we should get support somewhere in that range. And the F Fund, continues this sideways. The question is going to be, we had this 1, 2, 3, 4, 5 move to the downside. We had this ABC recovery rally. If this is a 1 move down, we have some consolidation sideways. Are we setting up for another move lower? I mean, that's what it looks like on a monthly basis. But there's so much volatility that you can see from these big swings, right? That month, huge volatility on the F Fund, which you don't see very often. Okay, so that's kind of the monthly view. TSP Fund charts. So this is as of Thursday's close. If Friday continues the way it's going, prices are going to close the week lower than where they are right now. But on the weekly, we've been going straight up since April, and to have a little pullback for a week is not really, it shouldn't be a big concern. What we don't have, or what we did have here going into 2025, so we had a peak and a higher high, right? But we had a high in relative strength and a lower high in relative strength. So we had price increasing and relative strength decreasing. That divergence is a big red flag that the market is getting ready to roll over. And that's what happened, right, earlier this year. But we don't have that right now. Relative strength is not diverging with price. And a lot of that is because we haven't had any meaningful pullback since this bottom in April. So that's why everybody, the analysts keep talking about, we need some kind of pullback. Ideally, we get support there at that rising 20-week moving average line. But until we get some kind of pullback and see what happens, there's really no frame of reference. So you ride the rally as long as it goes. The good thing about it is this peak and this rising 20-week moving average line are coming in at the same place. So if price does pull back, we should see some support there. S Fund, you can kind of see that, this is the actual S Fund as opposed to the DWCFP index that we were looking at before, but this is the line, right? It just can't get above it. Hopefully we get up here and get a weekly close, anything above 97.50. If we get a weekly close above 98, the S Fund is doing good, but we're definitely not there. S Fund is somewhere down here probably by the end of the week. iFund had been killing it, right? This was a huge move down in the iFund, and it gapped down at the open for the week, already taking out all of last week's gains. Again, all of that has to do with the dollar. having absolutely exploded to the upside. So the I fund, if ideally, again, we've been talking about needing a pullback in the I fund to get back into it. And a lot of it is going to depend on what happens with the dollar going forward. The dollar, as it increases, is really bad for the I fund, but it's also a draw, a negative for the C and the S funds. And the F fund, putting in this bullish triangle pattern. So we'll see if it can break out there to the upside. The F fund is definitely up today because everything's falling. The dollar's falling, stocks are falling, yield is falling, and there's some level of flight to safety happening today. And the G fund just goes up and to the right. It is a very, very challenging market out there. Nothing wrong with hanging out in the G fund while all the stuff sorts itself out, especially given the fact that we are so extended in the C and the S funds right now. A healthy pullback during the summer would be good for prices going up into the end of the year.
All right, questions. If you got any questions, you can put them in the comment section wherever you found the video. Or if there's no comment section, you can always shoot us an email at growmytsp at support at growmytsp.com, and the support team will get it on over to us. I hope you guys are having a great weekend, and hope the market stops being so crazy.
Yeah, let's hope.
All right, we'll see you guys later.
Out of here.